Welcome back. Ontario-based auto parts giant Linamar has reported first quarter results. It says its parts remain compliant with the Canada-US-Mexico agreement. That's a big topic on investors' minds. Let's talk about the results and the outlook moving forward with Linda Hasenfratz. She's executive chair of Linamar, and she joins us now. Linda, thanks a lot for joining us. There was growth in operating earnings, margins, diluted earnings per share, a modest decline in revenue. You applaud your team for a good execution, a strong execution in a tricky start to the year. Why don't you explain further?
Absolutely. Well, it's obviously been a challenging start to the year with, a myriad of different tariffs being, announced, rolled back, announced. So I'm pretty thrilled with where we've landed. As you've noted, our parts on the mobility side, our products on our industrial businesses are all USMCA compliant. So we're very happy that the USMCA agreement is still being respected, and that if you are compliant, you can still ship tariff-free. So that's a big relief for us. And at the same time, we've had our global teams very focused on operational improvements, cost improvements in a tough environment. I mean, markets are soft, markets are down. That's why sales are down a little bit. Happily, market share is growing, so that's offsetting a lot of the soft market. And all that work on the operational side is helping us to drive earnings growth. So I feel very good about the quarter.
Okay, Colin Szynski will ask the next question. He's a strategist at SIA Wealth Management. Colin?
Hi, thank you, Linda. These are fantastic numbers, and I think also your dividend increase is in this environment is great news as well. And what I wanted to ask is that generally on a more broad basis, how are you seeing the environment for demand for autos and for other products with the moving through the current tariff struggles with the U.S.? Are we seeing it impacting consumer spending or the economy?
Yeah, I mean, certainly markets are down, both in North America and Europe on the automotive side. So markets are down about 6% over last year in North America, 7% down in Europe. So the market has definitely softened off. It is a little better than what we'd expected. We were expecting the market to be soft in the first quarter, but it was a little better than what we thought it would be. So that's a plus. And we're continuing to see orders, flowing in at the same kind of level. So I'm glad to see that. On the industrial side of the house, again, markets were already tailing down. I mean, the access market was down quite a bit last year, so was the agricultural market, and we were expecting the markets to be down this year as they are. So I don't know that I can blame that on tariffs. I'm sure it is exacerbating the situation, but markets were already anticipated to be down. So, it's playing out pretty much as expected. And as I say, the key to managing that is really growing your market share. So if you can be doing more product in a smaller market, then you can offset that sales, which is why our sales didn't go down as much as the market.
Just remind our viewers, Linda, what the industrial segment at Linamar is. The company gets considered in shorthand form as an auto parts maker, but the company does other things besides that, and those other things are in the section that you call the industrial section. The mobility segment is the auto parts segment. Just to briefly explain the industrial segment.
Absolutely. So we really have two key areas in our industrial business. One is our Skyjack business, where we make scissor lifts, boom lifts, and telehandlers. So it's for construction, non-residential construction mainly, but also residential. And then we have quite a big business in agricultural products. So we make harvesting equipment, we make seeding, tillage, crop fertilization equipment. So everything that you sort of need for a cropping farmer. So those are the two components of our industrial business. It's about half and half, roughly. a little bit more on the ag side right now.
Okay, back to tariffs. About a month ago, Linamar published a letter to shareholders on the tariff impact. It said that there was, on the steel and aluminum tariffs, which remain in place at 25%, there was minimal impact to Linamar. And on vehicle tariffs, which are also still in place, there was no impact to Linamar. So just, is that, a month later, is that still the company's view?
Yeah, absolutely. I mean, if you look at metal tariffs for our mobility business, we have for many, many years had a normal adjustment for pricing for metal with our automotive customers. So every quarter, the price adjusts based on metal market pricing for steel or aluminum with our suppliers and with our customers. So there is no impact for us on anything happening on the commodity side on the automotive business. And on the industrial side, happily, where we are using metal, we are generally purchasing it in the same country. So we're not seeing much in the way of impact there. A little bit on the industrial side, a little bit from the supply base on the industrial side, but pretty minimal, as you point out. And vehicle tariffs, of course, we're not, making vehicles. We're making parts for vehicles, so we're not subject to those tariffs. And then happily on the parts tariffs that were introduced last weekend, if parts are USMCA compliant, which ours all are, there is no tariff. They're respecting the USMCA agreement, and there is no tariff if you are USMCA compliant. And again, the vast majority, pretty much everything that we're making is USMCA compliant. So overall, minimal impact from the tariffs at the moment. In terms of our direct bottom line impact, of course, I worry about the impact on our customers on the automotive side, for instance, as they are paying metal tariffs, they are paying vehicle tariffs, and they are paying parts tariffs for offshore parts that they're buying outside of North America, which starts to weigh on them, and therefore potentially pricing, which obviously would impact consumer demand and impact all of us.
Last question. I'm sure you were watching when Prime Minister Mark Carney was in the Oval Office earlier this week speaking with U.S. President Donald Trump. As a corporate leader in Canada, Linda, what do you and what does your company want to see the federal government of Canada accomplish with respect to our relations in the United States?
Yeah, I mean, to me, top priority is the maintenance of this USMCA agreement. I mean, our trilateral free trade inside of North America is, to me, critical to maintain. Our industries are so integrated, whether it's on the automotive side, which I think people are very clear about how many times parts are crossing borders and how transparent borders have become as we've set up supply chains, because they've been irrelevant for 50 years. So we go where there's capacity, we go where there's capability. So trying to disassemble that is very difficult and very costly. So I think that top priority, let's get that agreement solidified. So if there's concerns on the part of the U.S. With aspects of that agreement, let's address them. Let's get them out on the table, and let's get that deal, solidly behind us so that we can continue as sort of Fortress North America, and we're tariff-free within this continent as we have been for so long.
Linda, thanks a lot for joining us today. That's Linda Hasenfratz. She's Executive Chair of Linamar. Still